Hi and welcome, it's Steve and Alex here to talk about a little part of the ASX called enterprise software. Now, when most people think about software, they think new and they think rapidly growing, but there's a part of the ASX that has been around for a very long time in technology and has provided pretty regular opportunities for the astute investor, and we may be in one of those types of markets at the moment. Alex, maybe kick things off with a quick summary of what enterprise software means and what's different between that and your typical consumer software company.
So enterprise software companies sell software, and often large and complicated types of software, to other businesses. And most of the time those other businesses are also large businesses. So we're talking things like customer relationship management software, we're talking things like enterprise resource planning software, really big things that help big companies run key parts of their business.
Yep, we've owned Hansen a couple of times over the past 10 years. We've owned GBST, we've owned quite a few businesses over time in this space. What's some of the key features of them from an investment perspective?
Yeah, so a lot of this revenue, because of how key it is to the business that is the customer here, is the stickiness of it. So really often difficult to displace this software. RPM, which is our largest position, is a seller of enterprise software for the mining space. It's really difficult to rip out a lot of those solutions once they're embedded in a customer. Much like, for example, Phineas, which is a provider of insurance enterprise software, becomes part of the workflow and really difficult to rip out.
So the revenue, because of that stickiness, tends to be fairly predictable and reliable. Why do these share prices tend to be so volatile? I mean, we've seen them trade at very high multiples at some times and very low multiples at others.
Now, one of the bits about a complicated piece of software is that it's actually quite involved to put it into a business. And that usually requires a lot of professional services. So that is manpower that's required, paid for by the client to actually put the software in. That revenue stream goes up and down quite often, a lot more often than the underlying software revenue stream. And that's because new clients are won, and that needs to be implemented. And then existing clients often need updates and the like. So if you're talking a Bravura that does financial services software, a lot of its clients need certain regulatory changes implemented, and they will be paying for that over time.
Yeah, and the other feature here is often that these companies earn a lot of their revenues in US dollars or pounds in the case of Bravura. And we had a period really leading up to the end of 2019 of a declining Australian dollar. Plenty of work out there for these companies, so they were winning new deals, they were getting implementation revenues. Existing customers were spending a lot trying to customize it because they were confident about their business. And then COVID has hit. So what impact has that had on the businesses, and what's it done to the share prices?
So it's been an interesting experiment in terms of investor perception of these businesses, because we do have quite a lot of recurring revenue, underlying revenue that's actually not been terribly affected. The services piece, however, has been quite dramatically affected. New clients are harder to come by, existing clients aren't spending the money required. There's also a delay in decision making as well here. So even if a decision moves by 3 months or 6 months, that can be quite a big deal for the profit and loss statement of one of these businesses. You've also had a very favourable foreign exchange environment where the Australian dollar has been falling. A lot of these businesses are global in nature, and they will have operations where they're being paid in US dollars and in pounds, as you say. When the Australian dollar starts going up, that revenue stream is going to be worth less in Australian dollars. Oftentimes, with Australian headquartered businesses, more of their costs are actually in Australian dollars as well.
Yeah, it's a bit of an unexpected casualty of COVID, I would say. I don't think they were the first businesses that jumped to people's minds, but because all of their clients are working from home, because they've got other big issues on their minds, spending huge amounts of money on new software systems hasn't been top of the priority list. I also think one of the interesting features about these businesses is everyone looks at it and says, well, the margins are really low at this point in time, when what's happening is they're hanging on to a whole heap of staff in anticipation that a lot of that work of implementation work and maintenance is going to come back. And I think that's the right thing. But if it doesn't happen, I think you can run these businesses just on the annuity revenue at much, much higher margins than they look at the moment. So your downside here is probably less growth, but much higher margins than people are anticipating at the moment. We've added a few of these to the portfolio recently. We're currently working on a lot more. So you will see a few names pop up in the future quarterly reports. Keep an eye out for them. There's some of the better quality businesses on the ASX and at the moment trading for attractive prices. Thanks for tuning in.